All right, what's going on, everyone? Welcome to another segment of Crypto World Radio presented to you by Because Bitcoin. My name is King Wabi. I'm your host. I usually do these Monday through Friday at 7 p.m. Eastern Time. And today we're here with Premise and also special guest speaker, Good Guy Biker. One of the few Bitcoin OGs that I know that has been in the game for a couple of cycles now. Pretty interesting, dynamic character. Good Guy is. We haven't spoken since I think the Ethereum merge, and it's good to have you on, brother. Thank you, everyone, for tuning in to another segment, Crypto World Radio. Some pretty interesting developments, including 3AC coming back in some way or fashion, which which I've kind of thrown out there to you guys over the last couple of weeks or couple of months, if you've been following me for a while, and good to see that happen, even though it's kind of a meme. But anyways, Good Guy, how are you doing today, brother?
I'm beautiful. The plebs are excited, and that's a good thing. The liquidity is flowing, and that's a good thing too. People are getting educated, so that's always a good thing. And I still have my passive streams bringing me that Bitcoin as much as possible, and I'm happy about that too. So you know, daughter's almost a year and a half. Really enjoying fatherhood. Really wish I started sooner. Uh, always waited for a particular amount of money, and then every time I hit that amount of money, I still thought I'd need more money. So finally, we jumped into it, and really dialing back a lot of my business interest, trying to put as much of that on autopilot as I can, just enjoying this stuff, which is nice because most Bitcoin related business is fairly remote. You can do it remotely. It's fairly accessible. You can work around your schedule, and a lot of it's passive. So all these things I'm really enjoying as well. So yeah, no, life's good.
Just how is it like being a full time miner, dude? How did you get into that sort of business, man?
Oh, so that's and so in all honesty, for a long time, I built all the machines and I ran all the equipment because I'm a Cisco engineer originally, and so I used to do the network architecture. And I've always been keen on electronics. I've always been an enthusiast. I've always been a hardware hacker and edge lord, cypherpunk. So, but I've also come from financial background. My dad had hundreds of these Bell stores here in Canada, and among other things. And so I've had some interactions with that other side of things, and that financial understanding brought me a lot of value in the space as well. So it kind of all came together as a storm after I was hit off my BMW, my motorcycle in 2015. A young man made a U-turn in front of me on a bridge. I did the double front flip dismount. Just about lost my right arm. Really put myself in and out of the hospital for several years. 14 surgeries on my right arm alone. But it was at that point, sitting in the hospital, reflecting on all the things that I've done in Bitcoin, that made me realize that this is like a thing that's not going away. This isn't just for us fucking to give each other on chat boards anymore, right? It always could be internet money. It could have always been these stores of value, digital gold, whatever you want to call it. But in 2013, 2014, it wasn't that, right? In 2015, it started becoming that. And we started mining Bitcoin on old computers. Um, and then when Ethereum launched, we got really heavily into that with GPUs. All of this was built on profit. We started with just 7-year-old computers we had lying around, computers from 2010, 2011 that were our personal computers, and took returns on that and just kept buying more equipment. Um, so everything we shoestringed. We didn't really invest any money up front or throughout the process. It was Spencer and I, and Spencer got really smart. Spencer has certain tendencies and he's got certain abilities, and he's a little more prolific with the command lines than I am. So for a long time we struggled as business partners in the mining operations because we both tried to do everything. And eventually I stepped back and I did the forward facing stuff. I did more of the consulting. I did more of the sales, and the management in a sense. And he took over a lot of that physical, going to the warehouses, maintaining the equipment. And that took huge sums off my table. I was able to generate sales and kind of just throw them at him and make him do invoices. And it was a really good relationship, the two of us, up until about $3 million. As a $1 million business, it was fine. The two of us could be really scrappy. We could be really, um, shoestringy, and we just kept growing investments with people we would sell equipment to, or we would manage equipment with. We started by, again, running our home computers, but then we started using scales of economy and different things to our benefit. We started putting machines in friends' businesses, and that would increase their power draw for their warehouse or their moving company, or for their garage where they fix trucks. And that would actually lower them to a more beneficial power tier, from 9 cents to 6 cents, or from 14 cents down to 11 cents. And so it was kind of this mutual benefit. The heating here in Canada was a big benefit to these businesses, and if not, we could just open up a duct that we put in the side of the building, right? And there's really simple solutions. The engineering needs to be beneficial at small scales. So we would just end up maxing out all our friends and colleagues' locations to their benefit and ours. And then we would end up going scale with them. So we would get storage units at the ends of facilities near the transmission lines. We would have some pylons installed, or we would go into a lot of the old grow operations, right? That used to be marijuana heavy. Now, less power than a lot of people assume in those operations available, but certainly you can throw 36 ASICs up like tomorrow. And we just kept doing that and kept doing that and kept doing that, and finding other partners, and keeping relationships really small. But getting to a point where the businesses grew kind of outside of the two of us, we had to hire an operations guy to come in and be like, holy shit, you've got 12 different revenue streams in the space, and not a single one of those makes you less than $150 an hour. And they're all synergetic. Like, our white gloving clients, they become clients of our hosting, or they become clients of our equipment building, or we do personal work for them that's very high end. And the work we do for the law firms ends up getting us other work related to heuristics and on-chain management. And it's just, we ended up not being able to kill any of this stuff. So the mining has kind of just been the two of us for 7 years. We finally had to get to a point now where we're going to have to bring other people on board. But I think that's the biggest problem most of those mining operations make, is they're too fat. You don't need a lot of people to run 1,000 ASIC mine, right? Like, two people should be able to do that, in my opinion. And if you can't do that with two people, you have the wrong two people. And the more investors you get in, and the more people with interest you get in, the less return you make, the less upside you have. And the difficulty with this equipment is you want to own the equipment, because it's an ROI game. You want to make sure that you own the video card, you own the ASIC, you own the full node, whatever it is that you're doing, you have to own it, because you have to get to a point of return on investment and then start to make appreciation. And the more share of other people that own that equipment, the more invested interest you have in your operation, the more of that's taken away from you, the more of that upside that you lose. And what that ends up doing is that prolongs your ROI on that equipment. And in a space where there's kind of this hardware war, where you have to ever increase your footprint, your hash rate, you have to improve, overclock, optimize, get new equipment to keep up with that share of the pie, to keep up with that reward, which is ever dwindling every 4 years. These things are big considerations. And so it's not a static thing. And most people treat mining fairly static, when really, like, you have to be turning over old equipment on a regular basis at the market highs. We were getting S9s for $60 from Montreal in crate loads, and then like 4 or 5 months later, people were paying as much as $400 or $500 for them, right? Insanity. And the only reason for that is because the price ran and Bitcoin looked like it was more valuable. But you actually made more Bitcoin the month before, when the machines were worth a lot less and Bitcoin was worth a lot less, because there was less people mining, there was less hash rate. So your reward, your surface area of the pie, was larger. So when mining looks the least profitable, when our $15,000 ASICs, when our $12,000 computers were making $1 a day, we were accumulating more coins at the end of the month. That's the thing people forget. And if you're looking for the upside, that's where the upside is. It's about being able to bleed the longest so you can continue to make coins, and your surface area becomes competitive because of that. But yeah, mining, love it. And we hold the Bitcoin inside of the business, which makes it an asset of the company, which is used in barter here in Canada, which has a lot of benefits. So we're able to hold other assets inside of the company and reinvest that. We depreciate all the equipment, which is really important. All of the operational costs become a write-off. The conferences and all those other things go into that. So and I always say, if you're making enough money in your personal Bitcoin mine, you fucking lease yourself a Tesla or whatever the fuck you want, right? But you can show a loss for a lot of years due to the investing and the paying the power up front, which will benefit you later when you want to use that Bitcoin either outside of that business or inside that business. So that's another big consideration. Treating Bitcoin like a business has huge benefits.
Biker, I do have a question about mining. Do you think in the future, maybe 10, 15 years from now, as far as the size of the equipment with these miners, do you ever think it'll be streamlined? Kind of like how computers were, where, you know, like chips became smaller and smaller. So maybe the miners will be more appealing to the average user where you don't have to use these giant clunky machines, but maybe some rigs that are maybe a bit smaller don't produce that much heat. um, do you think that would be possible for the average user potentially in the next decade or two, or do you think
Yeah, so there's going to go one of two ways, right? So I think you'll see the marketing of Bitcoin used, I think, is what you're leaning towards, and you'll be able to mine Bitcoin on your refrigerator or on your fire alarm or whatever devices you have. Now, it'll be like an app that you download inside of their app store, and it points you at a Bitcoin pool. It doesn't mean it's doing it profitably, but it'll be a marketing technique. And because your power is being subsidized because of low energy products or whatever, there'll be certain justifications that are made or discounts off the equipment that can be used while you're mining to benefit some token that they'll give you, the Samsung coin or some stupid shit. And so yeah, that's coming. That kind of consumerism, the heaters at home, and all these other horrible ideas, right? And I think that's the difficulty when you treat Bitcoin kind of as a consumer instead of as a business. You're missing the upside, and it's a shame because people who are buying S9s right now, if they had just bought an S19, they would actually make money. And they would actually end up with more Bitcoin, and I that would make me happy, and they would be happier. Their family would be better off, and some people just don't really appreciate that the space is moving this quick. So we're going to hit a wall, in my opinion, King. The wall is going to be about 3 nanometers. We start to suffer certain kind of worldly issues, mechanical issues, specifically related to like quantum tunneling and other things like this, where the error rate goes up really high and the ability to be consistent at making chips that small. You have to use something called binning. Binning was kind of invented by Intel, and they started by taking their chips, and if they made a really bad i7, so if they made an i7 and it tested poorly, the CPU, they would turn off one of the cores that were shitty, and they would call it an i5. And if it was really shitty, they'd turn off 2 cores and call it an i3. Now that benefited enthusiasts because they could further unlock those things, although often they weren't stable. But that binning process allowed them to sell all their dog shit that they were producing in that silicone process. It's the wafer lottery. It's very difficult to produce effective things consistently at that scale. Anything under 7 nanometers gets very costly, and you get a lot of loss. So, if you don't have binning to benefit you, right? If you're trying to put out specifically 3 nanometer chips that are standard, it's going to be really difficult. Intel was trying to do something similar, and it kind of ended up being a nothing burger, right? They were nerfing a lot of their chips, and they were kind of binning their chips very specifically outside of what they were trying to do. They were keeping everything in a certain range for their Intel, server cards and their FPGAs that they're working with now. And it's not going to be as Their video cards were kind of a flop. All these things are limited, right, by that engineering, by that narrow mindset. You need to be able to have, as an example, the S19. Like Bitmain was selling at one point 187 different fucking SKUs for the same piece of hardware. They were selling it as 187 different products. It's the S19 103. It's the S19 107. It's the S19 107 Pro. It's the S19 12. It's the S19 30 Hydro. And like the boards were the fucking same. It's just how effectively they were being tested, right? So at 3 nanometers, we get quantum tunneling issues, we get production issues, we get cost benefit ratio stuff, we get really specifics. There's really only two companies in the world, in my opinion, that could produce ASICs at scale at 3 nanometers, right? You know, Microsoft was actually one of the first companies to get these nice 3 nanometer stuff working, but to do so commercially is unviable in my opinion right now. Um, so when we start to get there in the next 10 years, I think there will be a physical wall. We won't be able to surpass certain computational Murphy's law, and all these things are going to start to kind of fall apart. And I think that's really interesting. So, and it's already starting to show, right? We're not doubling the same way we did for a long time.
So, do you think something like a project like BitTensor, which is essentially like the Bitcoin of AI, it's branded as this peer-to-peer intelligence market. Do you think something like that would be able to help facilitate Bitcoin in that retrospect, or potentially even grow the Bitcoin ecosystem through Lightning Labs and what they're trying to do with Taro, or do you
So
see?
I'm not a fan of that stuff particularly. Um, so, so Bitcoin will exist in layers. Bitcoin will act much like the TCP/IP protocol in the stack of protocols that make what we're doing right now exist. Right? Without TCP/IP protocol, we couldn't get IP addresses. We couldn't talk to each other the way we do on the internet. None of this stuff would work. All these technologies, these businesses, these innovations, these services or smartphones, they all exist on top of that one protocol. Everything's built on top. You start with FTP, you start with SMS, you start with all these other things, you move out. Okay. So the Bitcoin stuff, it's inevitable. We will end up with all these side chains and drive chains and shit coins on Bitcoin and NFT marketplaces and all of that stuff. And people will continue to justify it. But the Taro stuff specifically, the dollarization of the Lightning network, I think is a potential attack surface for the Lightning network. I think that we hear people like Jason Lowery talk about the weaponization of Bitcoin. We talk about how Bitcoin mining, is munitions and different things of this nature, misquoting some of these old case law or precedents, or in cases where there isn't precedent, he's pretending there was in relation to the pretty good PGP, all these different things that these bad actors are pushing right now. I think Sailor ultimately will end up being a part of it. I think in the near future we will see Sailor be made to be a compliance officer as he salutes the U.S. governance compliance because he has to. He has a corporation that holds Bitcoin and is publicly traded. So he will have to comply with federal laws because he exists inside of that space. And so for him, it's a better business. Just like he spoke openly about how wash trading and tax harvesting with Bitcoin was bad. He spoke out about this stuff even as far back as like 2014. He talked about how these things were bad. And let's not forget how new he is into having Bitcoin. But he did it the second it was a benefit to his business. And in fact, he's probably one of the last people that will benefit from that loophole. Um, Closing something going against what he said, all at the same time he also said he never sells Bitcoin. And of course people can call it whatever they want. So here's the issue: when the compliance comes knocking, he will also do that regardless of what he says or how he feels, because it will also be good for business. So I feel that the biggest threat to Lightning that most people are unaware of is US dollarization on Taro on the Lightning network, turning the Lightning network operators into money service providers, putting them under compliance and forcing them to do KYC both on who they're interacting with and themselves, and putting the onus of that record keeping on those individuals. And I think that's a really, really, really scary prospect. And I think there are people pushing towards that. And so I feel like if we know it or not, Sailor, just like a lot of other people in this space, we just saw Natalie pushing shit coins, and she was all about undressing Bitcoin. We've seen Kaiser fucking sell us gold-backed Ethereum tokens, all sorts of funny shit. I think very soon we're gonna see Sailor selling us Taro-backed liquidity as the largest provider on the Lightning Network, as a 100% OFAC compliant operator, and I think that's also really scary. I just wish people would appreciate that when you add extra layers or extra code, you add 1000x possibilities for attacks, vulnerabilities, and some of these different types of potential flaws, right? And the dollarization of Bitcoin is just one of those things.
So essentially, what you're saying is that there's the possibility that Bitcoin could have this ecosystem where it's sort of like a ref link, since you're saying, OFAC compliant, all that stuff, shilling, shilling ecosystem tokens off of Bitcoin, things of that nature. What are we talking about here? Like Bitcoin dexes,
Oh,
created by
everything, yeah.
Michael
Oh,
Saylor.
everything. We
So
can't stop
how?
them. Just because Sailor is going to be the
Yeah.
largest provider of OFAC compliant Lightning liquidity doesn't mean that people won't also be doing drive chains and people won't be writing smart contracts to deposit gambling shit into on Taproot and TapScript and GRoot and all this other stuff, right? Like, no, I think that's all in the pipe, and I think that nobody can stop it. I think it all doesn't get adopted universally, and that's what's really interesting about sidechains is you don't have to use Lightning, right? You don't have to use it. You don't have to use a drive chain. You don't have to use any of these other services. Fuck. You can download Bitcoin Core and try to fucking command line your way through some transactions if you want. And I don't recommend it, but you still can have all that backwards compatibility. And I think that's really important. People forget that. With all these other chains, they're forced to have these hard forks. They're changing their protocols in ways that the old versions are no longer compatible. Bitcoin is kind of unique in that way that it's stayed backwards compatible, which is also why it's like TCP/IP protocol. And people don't understand what that is. That's what makes the internet work. It's the bottom. It's the bottom layer there. Um, Networking in general. Uh, it's backwards compatible, so it won't suffer all these legacy issues that all these other blockchains are going to have. I see a future where things like the virtual machine in Ethereum are used in all sorts of stupid ways, and I see people just like the same way that they struggle at like big box stores to like sell you a wash machine and then have the wash machine delivered and then have someone install it. They have to go to like 2 or 3 different computers and use a bunch of different. It's all these legacy issues. These fucking airports that are still running Windows XP have to hire guys that haven't worked for 10 years to come back and fix stuff when things go wrong, right? These legacy issues. I think Ethereum is going to create infinite amounts of legacy issues for all these businesses that interact with it because it's going to keep changing dramatically and people aren't going to be able to keep changing their interfaces with that. And so all their services are just going to get wonky. And we saw that with how much liquidity disappeared recently with all the 3AC stuff and all the collapses of FTX and Alameda. We saw how little liquidity was at the other side of a lot of these tokens, was at the other sides of a lot of these smart contracts, how much availability you had to actually sell your Tron wrapped Bitcoin, right? And all this other bullshit. Well, there wasn't any fucking liquidity. Any that were there, Justin Sun and all his lackeys, CZ and all these other asshats, were draining as fast as they could into things like Bitcoin and Ethereum. They were draining all of this liquidity. They were literally creating stable coins out of thin air and forcing trading pairs into those stable coins just to further drain the fucking liquidity from all of these fucking smart contracts. There it looks like these things are worth money. Just try and go sell them. None of them are worth any money right now. Yeah. Hmm. Fun times. And it's only getting worse, especially at Binance.
Yeah, I don't think anything bad's gonna happen with Binance, to be honest. But one thing that I found pretty interesting is that there's actually more
They
Bitcoin.
just they just lost $12 billion of payout.
Yeah, yeah, that's fine, man. That's fine. I still think they'll be okay. I think after that these multi-week FUD campaigns, on Twitter Spaces, if that didn't really cause a bank run, and of course, like this price action does benefit Binance, I don't really think anything's gonna happen. This isn't really
No,
like
see,
Sam
so
Bankman
my
Fried.
concern for them is they still have a lot of shit coins that they couldn't get rid of.
That's
Right? So
fine. That's
so they're
fine,
going to use
man.
a lot of their consumers as exit liquidity for the indefinite future for this stuff. They're not really a market maker like Bitfinex and these other groups, BitMEX and these other guys. They're market makers, so they have the ability like week to week to move things around and make money. Whereas CZ and Justin and these guys would more create products and then move liquidity through those. It was a kind of a different approach at getting money, but I think that CZ's ability to do that is really dwindling right now, which I think is going to make them more strapped than I actually appreciate. They had more Bitcoin than any of the other exchanges, and after the recent run on their exchange, that's not really the case. And what's I think my biggest concern for CZ right now is because of his model, because he's not a market maker in a sense. He has a vulnerable way of generating money in the business, right? By creating these tokens and these pairs, by pushing these stable coins and different things. We've seen what I would call financial warfare in the space, where we've seen people target each other. And you could argue, people would argue that CZ was targeting Sam when he dumped all these tokens and all these other things. But Binance has been dumping all of their shit coins indefinitely. They've been trying to get out of all this stuff for like 8 months prior to this whole event. If you had looked at them on chain, they were just dumping everything into Bitcoin and Ethereum. So, so it wasn't necessarily like I'm gonna fucking get this guy really soon. It was just like he was finally at the point where he was getting rid of the rest of this fucking thing he was trying to get rid of, and it ended up blowing up FTX because of how bad it really was. And I think that market makers, specifically people with deep wallets, who are, let's call them eccentric millionaires, are going to come to the space and start throwing liquidity around to actually force out some of these pairs, to start crashing some of these stable coins and doing other things of this nature. And if you look at Justin Sun's stable coin that he created recently, it's anything but stable. And I would even argue that it seems like there's financial attacking going on against that stable coin, and people are able to pull out a 4, 5, 6% spread several times a day by pushing money against it and pulling it out in an adversarial way, and that's something to pay attention to. And I think that CZ especially is vulnerable to these types of financial attacks, and I think a lot of the new people that are going to be doing it are going to come from outside the space, and they're going to get into bed with people that have been hurt by CZ and Justin and some of these other people, and kind of give them the recipe of how to take $280,000 and collapse a fucking trading pair, for example.
Man, that's that's a lot to take in, man. But I know with Justin Sun, he's an entity of its own, man.
I think he still
I
owes
would
those guys
not.
Teslas, right? He
Yeah,
never gave those guys the Teslas, right?
I would not touch TRX with a 10-foot pole, man. I
He
like
forced
T.
liquidity out of FTX, though, right? The trading pairs. Did you follow that whole thing?
Yeah, I remember. He told individuals that like, oh, there's gonna be a plan, right, for people that held TRX native assets on FTX.
No, so
Um,
he allowed the holders after FTX to blow up. He allowed people to trade into Tron to get their liquidity out of FTX, but they did so by doing so. They were waiving their rights to claims against the lawsuit, and they were getting like a percentage of what their payout would be in a sense. Um, and Justin had pumped Tron the day prior quite a bit, and then he allowed these people to basically trade out. And he was just literally dumping Tron on all of these FTX holders, and he was just playing the spread for himself. It's amazing. It's fucking amazing to watch how slimy these guys are. But I guess for some people, they got their liquidity, or they got 30% or 40% of their liquidity after the spread. So good for them, I guess. I don't know. It's all very funny to watch when you dig in. And this is all while Justin's creating stable coins and CC's creating stable coins, and they're literally forcing their exchange pairs into these fucking stable coins without like more than a day's notice. Just amazing.
Hey, Premise, if you want to give your thoughts on all of this, feel free to go ahead. I know that TRX was your first love in the market.
Yeah, man. Actually, I always thought Justin Sun was actually kind of a clown towards the end of it because he was trying to copy so many projects. But TRX, when I first got into crypto in 2017, was the baby that kind of got me out of the it got me out of working at a restaurant. So let's just be straightforward. I was trying to invest, and nothing was working in stock market. I got into crypto, and it was TRX that I found my way through. Well, I always thought Justin Sun was an interesting character. This is really good information. I was just listening, especially about the mining stuff, and kind of trying to figure out would mining be something I would ever want to get into. Now that I'm building my own personal portfolio up over the years. So yeah, I kind of like all this information, man. Appreciate for all the insights on it. Yeah, I would not put it past Justin Sun to be a bad actor in this industry whatsoever. I always thought the whole what's his stable token called? Something like, I don't know. It was like named after him. I thought that was kind
It's
of strange, but yeah, I
USDD.
appreciate all this
Well,
information.
you know they did
It's called the
the Ethereum
USDD,
fork too.
but it's
One of my new favorite things that he did recently, actually probably my most favorite thing, is he forked Ethereum after the proof of stake. He put up $1 million of liquidity, quote unquote liquidity, for Ethereum POW or perpetual. And what he did was he changed the code in a way that there was a fee. Part of the transaction fees and subsidies always went back to this master wallet, which for developer and promotion fees. Okay, and so the chain was just paying fucking Justin. That was the big joke. Um, but he actually forgot to keep the goddamn key when he forked the chain. So he was literally like trying to hire people to like backtrack the code. He was talking about reorging it so he'd get this fucking master key. So he could actually use the Ethereum from this wallet. He was sending all this shady proof of work. And it's like all the people that didn't switch over to, turn off their rigs that day. A lot of these pools like pushed the one of the two proof of works. And so all these people were mining Justin's coin, and now there's a bunch of fucking Ethereum that he can't touch, and he's so mad about it. So he's like completely walked away from the project, and he's like, "Fuck you guys! I'm taking my ball and going home." But there was no ball, and he forgot the key. So it's all actually really amazing. So Justin, you're a real character. Almost as much as when CZ said he was going to reorg Bitcoin after they hacked themselves at a favorably taxable time period. But on the mining, Bitcoin maximalism is something that I think is good for like my grandmother. If I met like a low IQ person, or if I met like someone who had like a lot of they were boxers previously in their life and they had been hit in the head a whole lot. I think, or if like my aunt who likes to drink a lot met a cryptocurrency bro in a dark alley, I would hope they would be a maxi with a hardware wallet. That would make me the happiest, because if they only bought Bitcoin and they only put it in hardware wallets, they're probably going to be okay. But we did Ethereum mining profitably as a business, and it was 30% on average at minimum, 34% over those years, more profitable than the Bitcoin mining, dollar per dollar, kilowatt per kilowatt. We're talking hardware invested, we're talking electrical consumption, we're talking performance month over month. So we treat a lot of this as a business. We're doing a lot of speculative mining with GPUs again, which is something we haven't done in a long time. But when we first started mining on computers, we were doing Bitcoin, but we also were spec mining. And we were able to do things like mine coins that were 0.07 cents, mine hundreds of them in a week for several weeks, and then sell them, in 2 weeks for 14 US dollars a coin. And so we're all of a sudden we've got 16 grand for something we were doing on a CPU We weren't even using the fucking GPUs. We weren't even using the FPGAs. We were using the processor to do some other thing, some speculative thing. And it made us 16 grand in 2 weeks. We were just like, what the fuck? Holy, like, this is a thing. This is, right? All these, holy shit. So we started doing a lot of that speculation, and it worked. And I think we're in a period now where speculating, not buying, but these really early projects that you can mine on a personal computer at home, at the library, at your office when nobody's looking. You can mine these coins and generate hundreds of them. The idea is you want to get them weeks old, right? There's a really good website, miningpoolstats.stream, and on there's a page that has all the new projects listed and the different algorithms. And different algorithms are good on NVIDIA, or good on Intel, or good on AMD. And so you can look at those different algorithms and decide if you want to run them on your processor, or on your graphics cards, or on a server that you're getting from Amazon. And I think it's before these venture capitalists can invest, really, before these coins have community, before these coins have investors, they need a certain amount of functionality. They need a certain amount of security. And so what you do is you end up using your computer to provide that in an early period, before those halvening events, before those halvings of rewardings and different types of distribution models get lower and lower. And the difficulty is really easy at the beginning. So we're just accumulating all sorts of bags of these absolute dog shit coins that nobody knows about. And we're just hoping at some point in the next year some of these coins start to get listed on exchanges and
So,
do like 10,000x. And we're doing a ton of that right now. We're also still doing some very adversarial stuff on FPGAs. So we have a small network of bros that use things like the BCU and the VCU 1525 to attack shitcoins by accelerating their distribution models, by fucking with their protocols, by doing timestamp attacks, by sweeping all the airdrops, by doing anything that we can to just destroy them. And sometimes we do that in a legal, profit-seeking way, but often we do so in kind of a self-promoting, adversarial way, white hat way. And we scream at these people in the discords before we blow up their chains, of course. And they don't listen, they don't upgrade, they don't make changes, and so then it is what it is.
so is this like proof of work DeFi, brother? Essentially, because it sounds like DeFi to me, bro. But most
So
of
we do a
DeFi
ton
is
of
usually proof of stake
MEV.
stuff.
That was the most profitable stuff we did, was miner extracted value on things like Ethereum. And that's where you're market making. So you make a transaction, and we see that transaction in the mempool, and we actually front run that or cancel that transaction as miners, and we mine that before you. Or you try to buy a coin from one of these dexes, from one of these DeFi smart contracts or liquidity pools, and we buy out all of that liquidity for that token, because we can see you trying to interact with that smart contract in the mempool, trying to initiate that transaction. So what we do is we buy all the liquidity before you, and then force you into that like 20% slippage. And so it looks like you're going to pay one fee, and then all of a sudden you're paying a much larger fee. Or we can even do things like we can fail the transaction, and we get to keep the fees, but your transaction just gets failed. And so there's all these adversarial things that you can do in mining because of all these shit coins, because of all these tokens and all these different chains. It's called MEV, maximum extracted value now. Previously, it was miner extracted value. Now, the validators on proof of stake Ethereum are doing it. But this MEV stuff is also coming to Bitcoin, because we are seeing these side chains and drive chains and tokenization. So there will be a need for market making. You'll have to bring money from one place and put it in another. And so one of our records, our pool, we did on April 4th of last year. We turned what was $12,000 of liquidity, of our own liquidity, US dollar liquidity, stablecoin. We turned that into a $908,000 return. We took $12,000. We turned that roughly into about $148,000 of liquidity by doing round smart contract borrowing. You put up your USD, you get a token, and then you borrow that token against another token against another token. It's called flash liquidity, flash loans. And we create $148,000 of liquidity, which we use to market make on people who were doing things. Essentially, in this case, someone was trying to sell millions of dollars of Bitcoin that was USDT into a smart contract that didn't have it on the other side. And so most of those millions of dollars went to us as the miners who did mining extracted value on that. I think he got like $1,500 out of his $1.2 million that he sent into that smart contract. Like just wild fuckery, right? Um, it's very people don't understand, but that's the miner extracted value was just as profitable, if not more profitable, than the mining for the majority of the time when the markets were up, rather.
Jeez, man, so you pretty much gave the blueprint, bro, as far as how 3AC is gonna make it all back, man. You saw the news. You saw the news today. You
Yeah,
saw the
yeah.
news today, man. What's kind of crazy, dude, is that like I'm aware through some like third party sources that they did get private funding from Dubai. So they are coming back at some capacity, but like the way they're launching their exchange, there are a few things there that like definitely do raise some alarms. Um, and a lot of it really seems like a cover up for something else. I kind of feel like the announcement of today was sort of like, so that the industry looks at what 3AC is about to do, and then something else would probably pop up. But then I saw like Cancer and Clark posting screenshots of a video file from the GTX, or yeah, I think it's called GTX, yeah, something like that, where they actually give the pitch on video. So you pretty much gave the blueprint, man. Sorry if my voice is raspy, dude. Um, again, just came from a pretty long nap, dude.
There's three. I think
It
there's three
is
books to
what
read
it
about
is.
it: Dark Pools, Flash Boys, and the Quants. Because
The
all those
Flash Boys, dude. Team Flash Boys all the way,
they're
brother.
they're all traditional market mechanisms that have come to the cryptocurrency space, and they're coming to Bitcoin as well. So learning about them and learning how to benefit from them, because this is it's not illegal. It's not these things are going on. It's fair game. In fact, the developers want you to participate as a pleb because it evens the playing field. So you could look up like Flashbots, for example, and all these different code bases that exist now as kind of an open source thing they want people to use so that you can interact with these different chains and participate in these things I'm talking about. Because they want you to make the money too, not just guys like me or guys who are much bigger than me. So it's not a bad thing. It's a little fucking shady, but you need to learn about it properly to appreciate. Dark Pools, great book. The Quants and Flash Boys. It's all market making stuff and explains the stuff I think in really good details.
Well, as long as they're good guys like you, man, I think okay, right. We need an army of good guys. Premise. Go ahead, man.
Now,
Guys, I see we're coming near the 1 hour mark. Wow, this has gone by pretty quickly. Guys, if you're here in the audience and you want to come up and share your thoughts, ask some questions, join the conversation,
Be a dick.
feel free to click that request button. I'll bring you right up. My name's King Wabi, and I host Crypto World Radio here on Because Bitcoin Twitter Spaces Monday through Friday at 7 p.m. Eastern Time. And we're here with Good Guy Biker, a very well known person in the Bitcoin and digital asset community. And we're just here talking shop, talking all things BTC and digital assets. And just in case if you arrived at the space a bit later than 7 p.m. Eastern Time, I want to let you know that we do upload all of our Twitter spaces on our YouTube, which is the same as our Twitter handle, because Bitcoin. Usually 5 to 10 minutes after these Twitter spaces are complete, they will be uploaded onto our YouTube channel under the playlist section, where you'll see Crypto World Radio and all the previous episodes. And if you're new here on our Twitter spaces here because Bitcoin, I encourage you to follow our page and turn on bell notifications so that you can have a heads up notice to when these Twitter spaces occur. Sometimes they are a bit earlier or a bit later on in the day, depending on any time zone differences that I have with guests. Such as tomorrow. Tomorrow at 2 p.m. Eastern Time, I'll be having the founder of Velshire Capital, Dr. Jeff Ross, another well-known individual in the digital asset space and Bitcoin community. And Dr. Jeff is a friend of the show. I look forward to that. See, we have a couple of requests here for speakers. I'll bring you guys right up.
While
Premise,
you
go
guys are
ahead.
over at YouTube, if you get a chance, check out Good Guy Biker. We do a bunch of random acts of kindness, try to do nice and things, encourage people.
No
We also
problem,
post a,
man.
we
No
also
problem,
post all our
dude.
kind of inside alpha with the mining and all our secrets to overclocking shit and unlocking stuff. So it's a good spot. But my favorite video is the video of me flipping over the car with my BMW. So if you like seeing people crash motorcycles, that one's on there too.
I had a question for you, good guy, because some of the stuff you were talking about reminded me of something, but it sounded like those were kind of going against people who were trying to either do these loans or so. We had a friend of the brand up here one time, and he was telling me how miners can cheat other miners by making them think they can get a reward when they really can't, and saying that could become a problem. Do you know anything? And Wabi might know what he called it. I actually don't have my notes on me because I'm in the car.
Well,
Can you
I
speak
guess
to that a little?
it depends on the chain, right? Like there's different types of ways you can screw around. One of the most common ones are like empty blocks. So you're not mining transactions in a sense. So you're affecting the consumers more than you are the miners because the miners can still do this profitably. Um, as far as like, so you can race miners in a sense. So you could adversarially target blocks that are similar to what other mines are making. So other pools could be. So the way it works is the transactions go to the mempool, and you can mostly weight miners pick the transactions by profitability. So whatever has the most fees, up to the limit, the megabyte limit of the block. Um, they try to fill that up with the most profitable transactions as possible. Now, there's also market making, which is you're front running some of those things from that mempool, or you're manipulating them in a way that creates profitability. To target another mining pool, to be trying to create blocks in an adversarial way, whoever submits the block first, right? That work is completed, and then they have to move on to the next block, uh, the next hash essentially. So anyone who submits after that would essentially get no reward for that. So I think there's certain ways you could do it, but I don't think it would be very profitable sustained, if that makes any sense.
Yeah, he was posing it as like something that could be a threat down the road to Bitcoin mining as a whole. I was trying to get some more insight on that.
Yeah. So again, these are these eccentric people that don't like to make money. And I think anyone that tries to attack Bitcoin for 10 minutes is going to look at how expensive it is and look at how much work they didn't actually accomplish. Um, and then they'll realize pretty quickly that it's probably a lot better for them to be good actors. And I think even like some of the scary bad guys in this space, some of the bosses, right? The China fucking pools, the Bitmain pools and stuff, they all had control at one point. Even for them, it made more sense to just remain profitable, just to do so as a good actor. So these are uniquely bad actors we're talking about that have unsurmountable amounts of money and don't give a shit about it. And those people exist, right? Like they can fucking aircraft carry your ass one day. They can get off of you. Those things happen when we're talking about like new money and things outside of the U.S. dollar, adversarially. But I don't think that that's what this is going to be for a long time. So I don't think it's possible that we'll see actors come to the space just frivolously not caring for personal interest.
So you don't think even because thinking about the safety of Bitcoin, you don't think like a country could be a threat for something like that, like a
No,
China or
no,
Russia?
no. I think the biggest threats people aren't appreciating is like the mining interest that America has. It's 40%, of the mining is going on in America right now. And all these public corporations are dying, and a lot of that interest is leaving America as OFAC and ESG and all these things become more adversarial. So I think we'll continue to see mining move around and decentralize itself the same way it left China and went to Iran, left Iran, went to America. It's moving, to Europe. It's moving to Canada. It's moving to Africa. It's moving around, and I think that's going to continue. I think Bitcoin has kind of gotten past a lot of those bosses already. Like we're in kind of like the final zone in a lot of ways with Bitcoin, in that a lot of the different attack surfaces that could have worked, I think are like unsurmountable now. So no, I think these types of attacks I'm less worried about. I'm more concerned about like how much Bitcoin the FBI has and like hacked laptops they've taken from fucking cartels and like USB sticks and people's phones and all these fucking terrorists. They've been since 2012, but basically since 2004, it's been standard procedure to take all these electronics when they're doing these types of raids, right? When they're attacking these marketplaces, they operate these fucking marketplaces now for sometimes. So there's I think that co-oping, giving you a discount to pay out with your taxes by letting you bring that into their network and giving you benefits. I think that's by getting you to leave your Bitcoin at the local bank. I think that's what concerns me more is the co-oping of Bitcoin, going away from the sovereign stuff, going away from the money that it's fuck you to the government kind of stuff.
Bro,
I think that's consensus.
We have a friend of the show on. Field Pain, what's going on, brother?
What's going on? How you doing, Wabi? How's it going,
chilling,
good guy?
man. What's up?
Nothing much. I just had a question for good guy. As block difficulty increases over, like, let's say the next 50 to 100 years, do you worry about only a certain amount of miners basically being able to mine it and it effectively like becoming centralized to a certain amount of companies that basically just like squeeze the hash rate and make it to where nobody else can mine it besides X amount of companies?
It's a really good question, but I think people don't appreciate how important liquidity is going to be for Bitcoin in the future. So as there's less Bitcoin being mined, as more Bitcoin is being locked up and stored as a store of value, like I don't fucking sell my Bitcoin, but as more entities and as more countries back dollars and different things with it, as we see more of these second and third layers locking up Bitcoin in the Lightning Network, for example, for long periods of time, creating pairing stable coins to them and leaving that fucking Bitcoin alone forever as it created these tokens. I think a lot of that will mean that any liquidity, the ability to get Bitcoin at all, will have value. And not only that, the ability to create virgin Bitcoin, Bitcoin that doesn't have a transactional history, a Bitcoin that hasn't been blacklisted, a Bitcoin that's fresh and easy to use and is pseudo anonymous. I think people will mine Bitcoin at a loss to continue to get access to that no KYC Bitcoin. People pay a premium. So why would people in the future not mine at a loss to get access to money that can't be fucked with? It's the liquidity, I think, that matters. And that even the smallest amount of Bitcoin, I think will have great use for people in the future as far as utility. Even a little bit of Bitcoin will allow you to interact with the world in very powerful ways. I think that's going to be the important part of it. Yeah. And so like I think it's a race until 2040. By 2040, we see the block subsidy, the block reward overtaken by fees, transactional fees, in my opinion, so that the fees become more important. But I think with the optimization of secondary layers, we're gonna get full blocks with maximum amount of fees. I think layer one will get really optimized for the miners. I think it will get very predictable. I think it will the fees. I think things will continue to be profitable. I think that's part of the game theory. Technically, we can't mine all the Bitcoin until 2140, and even by then, there's still transaction fees, which I think will be of a benefit. That liquidity, right?
Appreciate it, man. And then I had one more question. I know it's hard to speculate on this because it's pretty far out, but and I know this was like FUD a couple of years ago about like the quantum computing aspect of mining, how that's gonna play into the role of
Yeah, I think
Bitcoin mining. But
it goes one of two. It either
yeah,
makes Bitcoin strong as fuck, people use it to benefit Bitcoin mining, and these guys become like hash lords, which I think is a good thing. Or we implement quantum hardening, which I think there's 3 or 4 different developers that have worked on this stuff. There's several GitHubs related to Bitcoin quantum hardening. It's just very weighted, so we're not going to implement any of that stuff until it actually exists. So I don't think it's a real attack surface. But I do got to jump here, guys. If anybody else has any comments, feel free to leave them in the chat bubble, that purple bubble in the bottom right, and I'll try to reply to them all here after my next call.
All right, man. Thanks for hopping on, brother. Appreciate you, man. We'll have
appreciate it, man.
the
Thank
link
you.
ready for you. We'll have the link ready for you soon after this space is complete, 5 to 10 minutes. Nicholas and damn yeah, If you want to leave any questions or statements that you had over in the comments section here at the space, feel free to do so.
Um, I mean, I got a question for a good guy, and is regarding MEV. Do you think that in the future MEV is going to get like heavily regulated, that it will be like extremely legal to practice MEV?
So it's mostly facilitating like the Ponzi schemes right now, as far as I'm concerned, on Ethereum. But that's like 4% of the 7% reward that you get as an Ethereum staker. So as long as Ethereum staking is legal, MEV is going to be fucking legal. And I think it's also a function. Market making is a function of the liquidity. So if you take away MEV, you end up with a lot of slippage, basically, and a lot of these products can't exist in the way that they currently do. These dexes, these DeFi's, these smart contracts. So
Yeah, but I mean, you can do a lot of shady things with MEV. Like the other day, I think that there was a protocol that was attacked via flash loans. So
I don't know. It's basically what Citadel and all those dark pools do already. So I think there's precedent in the traditional space, which is why I refer to those books. But I gotta go, guys. Cheers.
Thanks, brother. Thanks for hopping on, man. Thank you. Peace out, brother. Well, if anyone wants to comment on 3AC's comeback, feel free to give some final thoughts. I know we haven't really like gone too deep into that, but definitely this price action is pretty reminiscent of back when they were a prominent market maker. Payne, Premise, Nicholas, if you want to give your thoughts on that. If not, we can just wrap it up here, man, since we just reached that 1 hour mark.
Yeah, I'll say I think it's far less offensive that they're only raising 25 million, only asking for that. I think that if they're asking for like 250 million or something like that, people would be like, get the fuck out of here. You guys just blew, billions of dollars. But the fact that it's only 25, I feel like that there's people that like them enough that they'd be like, all right, I'll give these guys some liquidity to punt, see what they can do. So yeah, I don't know. I think it's pretty interesting though. I think they'll be a net positive to the space by coming back. They'll definitely pump some alt bags next time around. They're great
Premise,
market makers too.
yeah,
I
yeah.
mean, come on, bro. It's
I
like
would be shocked if they fail to like not raise any amount that they give, man.
me too.
That's my camp. I don't think they're scammers. I don't think Suzu or Kyle Davis were scammers. They were just positioned. Um, they were just positioned wrong.
They were just
And
ready for the super cycle.
what's crazy is that like Barry Silbert came out and said that he's going to be quote unquote part of the team. So it might be like psyop, man. A part of me kind of feels like a part of me kind of feels like this whole exchange thing might be something else entirely. To be honest, because like if you look at their pitch, it's like 3AC ran up 40x on forex, 80x in crypto before we went bust or something like that. So it kind of seems like a
So
little
this time will
troll.
be different.
Yeah, hopefully,
We'll
man.
take profits this time, we promise.
Oh gosh, oh gosh. Premise, do you have any thoughts on the development with Three Arrows and the people from CoinFlex?
Now, yeah, I didn't really get hurt by all their, whatever that is they went through. I think it's surprising if you can blow up something that big, you can come right back and like not even how long has it been? Just start again.
Yeah,
Barely
Yeah, that's
6
the
months,
funny
bro.
part.
yeah. It's
Now
basically
it's
a
even
bunch
been
of
a
people.
year. Yeah.
It's basically a bunch of people that like lost a significant portion and decided to team up together to make it all back. That's essentially what it is, and
It,
you'll be
it
able to trade. And you'll be able to trade like it's basically like bankruptcy claims and like account holdings for creditors to have the same thing, right? So if you have if you're a creditor from FTX, you'll be able to trade your way to make it all back, make it all back on the exchange. It's the wildest thing ever, to be honest. I couldn't really
Bro, I
I
just
couldn't
can't even
really believe
imagine
my eyes.
explaining this to someone in TradFi.
It's like, so what about the individuals from Mt. Gox? Is that going to be a thing too? So what if there's a whole DeFi market behind it, right? Because if this whole thing is actually going to be, processed as a legit institution, regulatory stuff, all that jazz. Uh,
I'll give
I,
you a
I
cheat code. I got a second here.
oh
If the
wow, I
DeFi
thought, what's
marketplace,
up,
if
man?
it has a token, it has no hope. If the exchange or service creates a token, they're also going to be fucked if it has an in-house token. If they're
Oh
simply
gosh,
creating
man.
liquidity through trading pairs
Yeah,
on smart contracts, those DeFi pools, they are the future and they will be unstoppable. But anything with
yeah,
a token is totally fuckable.
yeah. I think if they release a token, it'll probably like go bonkers. It'll probably go like bonk, to Valhalla. Um, it's gonna be beautiful to see, bro. Suzu's the golden boy. I'm placing all my eggs with Zoo. Nicholas, what do you think about the return of the golden boy, Suzu?
I mean, uh, I think that it's probably going to be a good product.
I mean, dude,
as, as as much as people hate on them, because I mean, you can say what you want about them, but they
yeah,
have like years and years of experience. Like I mean, they know how to build an exchange. They're probably going to build a really, really good speculator tool, speculation tool.
yeah. I think a lot of people, even though they might clown it, they're gonna throw a few shekels on there. Because I mean, you see this pump, right? That's gone on over the few weeks, and you got to ask yourself, dang, this price action, what does it remind me of, right? Take a look at Aptos, right? For example, like what does that remind you of, dude? Even Avax, what does that remind you of, bro? Like just straight up, like Chad candles. I wonder who could be behind that sort of price action, right? And then this announcement, kind of like let me give you a New Year's present, but hopefully we still have the music. Come springtime, summertime. Hopefully we don't get rugged below the yearly open or anything like that. So, that being said, I'm gonna wrap up here, guys. We just crossed that hour mark. I want to be respectful for everyone's time. I want to thank Good Guy. I want to thank our speakers, Premise, Payne, Nicholas. Thank you for coming up here and adding to the conversation. Thank you guys so much. My name is King Wabi. I'll see you guys tomorrow at 2 p.m. Eastern Time. And we're going to have Dr. Jeff Ross as our special guest, good friend of the brand. And once more, it'll be at 2 p.m. Eastern Time, so a bit earlier than usual. And yeah, I look forward to seeing you guys there. And I have the link to our Discord up above if you want to join a community that is pretty active 24/7. Feel free to do that. And if you want to catch a replay of the space, then feel free to go on YouTube at Because Bitcoin and catch the replay right under our playlist, right at Crypto World Radio. And thank you guys so much for showing up today. Take care and God bless you.
The trading current is just math. It's just math. It has a 95.45% hit rate when we deviate outside of CP2 and CN2. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. 95 out of 100 times. When I buy this, I'm going to get some sort of bounce. It's just math. Look what would have happened as we move up. Look at the bounce that came after. And now look where we are. If you had just blindly followed the current, you take all emotions out of it, and you say, I'm going to trust the statisticians, you would have bought Dow Jones somewhere down here under 30,000. You know, depending on how you want to measure it from absolute top to bottom, 20% move. We also have multi-time frame alerts. You don't even have to be at your computer on TradingView. You can ping your phone. Now, the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. It's just math. There's really no need to overcomplicate things, not even in the slightest.